What's going on, everybody? It's November 4th, 2022, the log episode number 45. And today we're going to cover US 500 and the price action that took place. The trade that I took and managed was only a demo trade due to NFP. Last that we spoke, last night, I was annotating this fair value gap on the daily time frame. Also the bearish order block. And even coming into the New York session, I was annotating some other levels as well for you to pay attention to. So this was our point of interest today. We needed price to drive up into this area in order for us to start looking for shorts. Anything else would be just invalid. And this is the narrative. This is the reasoning why we should be going short. I talked about today in the Telegram how ICT gave the YouTube mentorship this year. He gave you a model. Okay, he gave you an entry pattern. Now, that entry pattern is completely useless if you do not know higher time frame narrative. So the draw on liquidity, what does that mean? It means where is price magnetizing towards and why should it go where it should be drawn to? Now that may seem complicated, but it's actually quite easy. You need to identify your higher time frame PD arrays. So your weekly, your daily, your 4-hour. You need to see where they're at relative to the dealing range. You need to be inside of a discount or a premium relative to what you are doing. So today, we're looking for a PD array that is inside of a premium. A PD array is a fair value gap, order block, breaker, mitigation block, balanced price range, etc. That's what a PD array is, okay, when I say that. So you're trying to locate an area of interest that price should trade into before you start looking for trades to start forming on lower time frames. So we needed price to drive up into this daily fair value gap in order for us to start looking for that lower time frame model to form. Does that make sense? That's how narrative works, and you are understanding where price is going on a daily time frame. We understand on a daily time frame that price displaced lower. We had a market structure shift underneath the low there. We have a fair value gap here. So we want price to return back up into a premium before we start looking for shorts. Okay, I've had a lot of questions over narrative today, and it may not make sense right away, but it's the reasoning why I do these daily logs, because whether or not you know it, you're learning narrative. It's the same thing that ICT has done for us. I just changed the name. Every single day, everybody thinks that the ICT mentorship was like every single day he did a teaching over a model or an entry pattern or this or that. I'm doing exactly what he did for me and for the ICT, charter members. He sat down with Price every single day and narrated what happened, where he thinks Price is likely to go, when he's going to sit on his hands, and that's it. And the more and more you keep watching these, the more and more you're going to start to understand narrative and start to understand how to use higher time frames and blend that into the YouTube model on lower time frames. Okay, so that's what I'm doing here. Now, looking at the 4-hour time frame, give me 1 second. I wanted to touch back on this thought here. Everybody thought that ICT, his mentorship was entry patterns and stuff like that. But in reality, all it was just plain boring rants and exactly what I'm doing here. And I don't think most people really understand that, because in the moment, even me, when I started beginning his mentorship, I thought it was kind of a load of crap, because I was like, man, he doesn't even put that many, markings on his chart. My old self, I wanted to have as many, annotations on my chart and dress it up as best as possible. In reality, you don't need that many things. You don't need that many moving parts. And the more and more I started watching his videos over, 3, 6 months, it started to click like, okay, He's teaching me how to read the market. He's teaching me how to read order flow. He's teaching me when to sit on my hands. And this is exactly what I'm doing for all of you. And I'm not saying I'm even close to ICT, but I'm trying to give you a glimpse into what being a charter member is like. So that's enough of the rant there. Going into the 4-hour time frame, I talked about the balanced price range plus the bearish fair value gap, which is resting from this high there to the low there. So I was saying to pay attention to that and the balanced price range, the most important. Why am I saying to pay attention to that area? Because it's blending in with the daily time frame fair value gap. It's in the same area. That creates high probability. Going down to the 1-hour time frame. The 1-hour time frame is in the exact same area as the 4-hour and the daily. That sets up high probability. If you take from your dealing range, and I know there's a other dealing range in here somewhere. I think on the 15-minute was where I was getting from body down to that low here. So we just hit equilibrium there. So that qualifies us to be inside of a premium. Now looking at the 1-hour time frame, we drew back up into here. On the open NFP, we whipsawed back and forth. The 30-minute time frame was one of the better looking fair value gaps to me, and I noted that last night and even in the New York session log. Reason being, it just looked extremely clean to me. I really liked the way the fair value gap looked. It was in a nice dealing range, premium, and I think that's just from experience, and that's also inside of the 1-hour, 4-hour, and daily fair value gap as well. So if you look at the bodies, look how beautifully it respected the discount low of that fair value gap. And I said we would take out the buy side liquidity resting there. 15-minute, same thing. This is actually the 30-minute. The 15-minute is from that low there and that high. Okay. Now, if we dig down into a 5-minute, let me annotate this really quickly. So ICT posted a video today over him taking a long, and some of you may have not have known why. And if you look at this area here, what do you see? This is a market maker buy model. Do you see how on each side it mirrors each other? It's basically a V. It's the easiest way I can explain it. So the second stage of distribution is AKA your unicorn trade. And the reason that is, said that way, and at least from my perspective and being taught from ICT, it's because it's the highest probability. The whole model is basically already played out, and you're the closest or nearest to the buy side, or if you're in a sell model, to the sell side liquidity. So it's pretty high probability. So if you're looking at this, price dips down into this fair value gap here. If you look at the 3-minute, fair value gap resting there. Now, some of you are probably asking, well, that's not inside of a discount. Now, this comes with experience. This comes with other things that I cannot say because it's just simply things I've been taught through his mentorship. And I will not say them because I've signed an NDA with him. So there's things that I will not teach, but you do not need to know them in order to be profitable. He's given you all the tools and even all the information out there to be profitable, okay? Stick to your rules. Stick to always being inside of a discount or premium when you're inside of these lower time frames. It's the best way to protect yourself, okay? So he took along there and took some partials above the buy side liquidity resting there. And I think he took a final partial into that SIBI there, annotated. Now for me, I took a short today, and this is all demo, paper trading. So I was looking at price, and I like the way we displaced into that 1 hour fair value gap, the 4-hour, the daily. That is the context of why you're taking this trade. You need to have that on the, I guess, back burner of your mind that this is the context of the trade. Why is price reversing at this level? Why should I start looking for shorts at this level? Because all of the criteria that I've said before is now met. Okay. That's the reasoning why I take trades. If you just simply look for these entry patterns with no backbone or no context of the daily, weekly, 4 hour, 1 hour, 30 minute, you're going to get lost inside of these lower time frames. Okay. Now, if you look at this, we took out buy side liquidity. We displaced lower. If you go on a 1 minute time frame here, you have your market structure shift underneath the low there. So we displaced lower. That's a really nice displacement. You have a 1 minute fair value gap here. 2 minute, same thing. 3 minute, same thing, resting there. 4 minute, same thing. 5 minute, same thing. And the reason I'm saying that is because I made it clear to you guys, I like entry patterns, or specifically the fair value gap entry pattern. When I'm using this model, I like to have it layered from a 5 to a 4 to a 3 to a 1. If they're all in the exact same area, that creates high probability. And especially with the higher time frame context, it's all adding up in my head as a high probability trade. Okay. Now, the next step is looking for your dealing range. So we have our fair value gap here. You have your dealing range high all the way down to your dealing range low. Price does what? Returns into a premium. I sold short. I actually sold short off the 5 minute. My entry was not perfect, as you can see here. It was actually right there, which sometimes I'm okay with taking a little bit more risk, which it really was not that much risk. It was maybe 10 points, so less than 1%. Losing. There we are. So I went short off of this 5 minute fair value gap. And then I was targeting the sell side liquidity here. That's the nearest sell side liquidity target. And then I took a partial here as well. The reason being, we're returning back into an opposing fair value gap. So we could have used that to send price higher, possibly, knowing NFP. So I took a partial. I also moved my stops to break even. And then I took a partial underneath here to fully close out. So to give you full transparency, I exited there, right at the low. Okay. It's not right at this low here. So that's the, I guess, context to why I took the trade today. I hope that at least clears some of your guys' questions and gives clarity to how to define a high probability setup. It's always using the higher time frame context as the backbone to the lower time frame entry pattern. Okay, so that's going to be it from me tonight. I will not be doing anything tomorrow. I may post something in the Telegram, and then Sunday I'll post a weekly forecast. So until then, everybody have a great weekend. Be safe, and good luck and good trading.